They're missing the big picture. Banks always win. We can trade alongside them or stay poor. What's up guys, Kevin Cage here with another crypto update. This video will be part 2 of the video we did just a couple days ago. Is this good or bad for Casper? Going over smart cities, tokenization as a service, and smart financial contracts. Now we're going to dive into a variety of alts in this one as well, including HBAR, so please watch all of this one. And all that I ask is, because these videos do take a long time to put together, is that if you find any of this information helpful or interesting, that you could hit the like button, or if you want to share it on Twitter, even better. And I greatly appreciate you guys, even if you've only ever tuned into a single video. Let's kick it off. Okay, first up, on Valentine's Day, just 2 days ago, we saw some FUD circulating on Twitter, even from Eleanor, we also had Watcher Guru, different people basically saying that the SEC was going to go after the firm Circle for their USDC stablecoin, the US dollar coin, basically charging them because they're selling unregistered securities. So I was posting some of this information on Instagram, and keep in mind this is my only Instagram account, beware scammers or impersonators. My only social media are linked right on my YouTube channel. And I said max FUD before the 2023 pump. So I was just saying there's lots of strange information being circulated by some news outlets. Nothing was actually confirmed. It was a lot of rumors, and I thought it was a ploy. Not financial advice, but I think all this FUD is a ploy. Lots of strange info being circulated and rumors about the SEC going after USDC. And remember that BlackRock, one of the largest custodians in the world, also connected to Coinbase, and Fidelity, each invested $200 million. So that's $400 million into the Series F of the firm Circle, the firm behind USDC. So you can always err on the side of caution and not hold a boatload of stablecoins. And I do not like Tether by any means. It's collateralized by crypto. It is very, very murky on how it's actually backed. I don't trust it. I don't hold large amounts of stablecoins by any means, but I always choose USDC over Tether. Now, I still will use Tether because I have to. There are certain exchanges that I'm unable to use or trade with the US dollar pair directly, and I have to use a stablecoin which has counterparty risk. So sometimes there's exchanges where they only have pairings between alts using a Tether pair. And so I was just emphasizing Fidelity and BlackRock are huge investors behind Circle. I mean, BlackRock basically controls the world, and you expect me to believe this USDC talk, all these rumors, it's a ploy. Max FUD before the 2023 pump, and FUD is always more powerful during a pullback. Even from this high, Bitcoin crashed about 11%. And all this FUD was being circulated when Bitcoin was around 21,000 to 22,000, and what happened after that? We got a big old pop all the way up to 25.2, a 15% move for the Bitcoin price chart, which is significant when you're considering really only a couple days. And we also have Eleanor for Fox Business apologizing for circulating false information. Circle has not received a Wells notice. I truly do apologize for the mistake. Now remember, Kevin O'Leary right here, Mr. Wonderful, said back in July, and keep in mind this is before the whole FTX situation, and just to be clear, I'm just sharing a video of Kevin O'Leary sharing BlackRock and Fidelity each invested $200 million into the Series F of Circle, basically showing that Circle is well backed and supported by the largest institutions and even the most corrupt banks around the world. I was sharing this before the FTX debacle, some of Kevin's tweets, and of course how he treated people after FTX. He lost all of my respect. We can see right here Jason, and he's actually the founder of Blockworks. Keep in mind, Bank of New York is their custodian, BlackRock manages the reserves, Visa settles transactions in USDC. 100% backed by cash and treasuries, not crypto, which is extremely volatile where you'd have to over-collateralize the backings, or the reserves. Also audited by Deloitte, one of the big four, annual audits filed with the SEC. This FUD is overblown. Now before diving into Casper really quick, for anybody that is yet to file your crypto taxes, there's a few crypto softwares. So I have this one linked in the top of the YouTube video description. I personally use this because my new CPA here prefers this. So you can just connect your exchanges, whether it's Coinbase, KuCoin, you name it, and this will actually produce your Form 8949 and Schedule D for cryptocurrency transactions to track your losses and capital gains. And you can also connect it to TurboTax or anything else. And every crypto tax software has their pros and cons. Another option which is completely free now is TaxBit. So I've used this one for probably 4 or 5 years or whenever they came out, and this is actually free. And I've heard a lot of rumors from different CPAs and even financial advisors that it's just a matter of time before exchanges will actually automatically provide us our 8949 tax forms so that we don't even have to use these platforms. Or eventually these platforms just plug into all of these exchanges and make it free. So hopefully we see something like this in the next few years. Remember, the crypto asset class is a baby in the scheme of things. For an asset class to be just over 10 years old, it hasn't even gotten started yet. We are so early. So remember, this is linked in the top of the YouTube video description, along with in my link tree. Now looking at the HBAR price chart, we are currently at 8.9 cents, and I did this YouTube video, and this is just a short on my other channel, talking about key levels. Now I'm still continuing to watch this 500-day moving average. We've shown a variety of altcoins that have already reached this level, and some of which have actually surpassed their March-April high. And I posted this short on Instagram if you also want to get a quick look at that. And turning the lights on, we're just going to draw a Fibonacci from the high to the low and look at the retracements. And we can see when we were doing that short video, we're actually right down here, under 7 cents. And where have we gone thus far? Up to the 11.8, right around 10 cents or 9.9 cents, depending on the exchange you're looking at. And here's Coinbase, where we actually went even higher to 10.5 cents rather than just like 9.9 down there. So still looking at these targets, guys, and yes, I do believe that HBAR takes out these levels and in the future creates a new all-time high price. And even if HBAR ever did play out a worst case scenario or did a double bottom at these levels back under 4 cents, your boy's going all in. You can see how valid these Fibonacci retracements are, and these are actually just smaller fractions of the 236 that I leverage, and we can see hitting the 11.8 to perfection. And when we turn that to support, the 236 is next, which is currently at 16 cents. I'm also watching the wick down here at about 13.8 in tandem with the 500 MA. Now, if the HBAR price chart continues to follow other alts that are already pumping like Fetch AI, we could in fact surpass the March-April high level around 24-25 cents. Notice right on the 382 Fibonacci retracement. Now, if you think these levels are boring and you want higher price targets, of course you can look at the all-time high price at 58 cents, but another level that I'll keep showing every few weeks. And to be clear, we've been talking about this level forever. This is the 702 Fibonacci retracement at 42 cents. Now, why am I talking about 42 cents besides a single confluence being at the 702? Let me show you and go to the double screen really quick. So now we have Hedera Tether on Bittrex 30-minute chart. You see this gap right there? We'll hide the indicators. You can see a gap in liquidity right at the 702 Fibonacci retracement. In my experience in the crypto market, does it sometimes take time? Yes. But do these gaps end up closing? Yes. And okay, now let's address this, going over the part 1 video for Casper and diving in and sharing some of my thoughts. Does the fact that a variety of crypto networks are being used to build smart cities freak you out? It could, and rightfully so. And to be clear, that is all of crypto. It is not just Casper. I see some guy with an HBAR handle criticizing Casper. In reality, HBAR is guilty of it too. They've been looked at by the Department of Defense for building smart city grids. They are being used for drones. They are being used for all types of supply chain issues. They are being used for IoT, Internet of Things devices in smart cities. And the same thing could be said if you only hold XRP and you're just an XRP maximalist and you say, oh, Casper is tied to smart cities. No way. It's utility, guys. XRP isn't perfect either. Hedera, Ripple, a variety of these organizations are directly tied to the World Economic Forum. We'll also talk about the pros and cons of Bitcoin and Ether, because those aren't perfect. And this is where the future is going. Smart cities, IoT, NFTs of intellectual property, music, royalties, real estate. All of this will evolve and be mainstream no matter what we do. I just hope they're built and connected to DLT infrastructure. And many L1s or layer 1s are tied to or have been looked at for smart city IoT applications, Casper HBAR, a variety, IOTA, you name it, and even many Hyperledger Foundation members such as Smart Dubai. I'm simply looking at protocols that could see high levels of global adoption and utility. Decide for yourselves. And here are some of my thoughts on the matter. I'm an investor for one reason: financial freedom for my family. Am I investing in my own slavery by embracing crypto and new technology, or am I investing in my own freedom? The answer is most likely yes, no, and both. Just like in quantum computing, we can see quantum computing relies on quantum bits or qubits, which can also represent a 0 or a 1, just like yes or no. The crazy thing is qubits can also achieve a mixed state called superposition, where they are both 1 and 0 simultaneously. So with any question in life, I don't like to just say yes, absolutely, and no, no way. Because depending on your individual perspective, including mine, my truth is true for me, and that's completely subjective. And likewise for any other person. And now let's talk about the pros and cons. There is no perfect investment. There's only opportunity, and there is no perfect project. I like things and dislike things about Bitcoin, ETH, XRP, and a variety of altcoins. And I don't hold a bunch of Bitcoin or ETH, but I do have some. I hold a lot of XRP though. So Bitcoin, the good things. We know it's digital money. It gave birth to this amazing asset class. It is kind of cool because it's anonymous, but at the same time, we don't know who Satoshi is or was. Was it a single person, or was it the CIA? Was it a group of individuals? And you can find bad things that are being built or good things. Technology can be used for good or bad. For Bitcoin, we have the George Soros Fund and Rothschild's Investment Corp own some. centralized mining pools in China, and of course proof of work actually encourages more centralization, so that's scary. We also have Ethereum, with considerable infrastructure controlled by Consensus and JP Morgan, yikes. In other altcoins, you could talk about artificial intelligence, Internet of Things, interoperability, and I'm talking any altcoin, Energy Web token for energy. And I like EWT, but they have some ties to some huge corporations that people might not like. Payment use cases, XRP, XLM tied to the World Economic Forum, and potentially NWO agendas if you guys are into that. All these use cases. There's some backing that I'm not fond of. With Algorand, there's also drones and banks in Europe like the Bank of Italy. And for Ethereum, yeah, I hold some Ethereum, and remember, JP Morgan essentially owns the majority of their infrastructure, and I hold some. Not because I like JP Morgan or other large banks, I hate them, but because I see where the space is headed and would rather profit with them rather than them profiting without me, which they will regardless. And my buddy Matthew had a great point, just about people that are ignoring some of these utility-based projects. They're missing the big picture. Banks always win. We can trade alongside them or stay poor. And this is all just technology, it's neutral. It can be used for a better or a worse world, and typically both. The answer is quantum. And there's also a plethora of positive examples and use cases of this technology that help people. And just like John says right here, it's all part of the Great Reset. I mean, come on, the World Economic Forum literally calls it the Great Reset. How creepy. But hopefully you guys can see where I'm coming from, whether or not you agree. I'm an investor for one reason, financial freedom. If banks, elites, the powers that be, are going to be rolling out different initiatives regardless, I'll be doing my best to ride the wave and make money and secure a future for my loved ones. My brother's the type of guy that lives in a van in Montana, so maybe I'll just join him. And here's a quote from Cliff Sarkin of Casper. We're now talking to the World Economic Forum itself about, the roadmap to becoming a member. And that shouldn't be a surprise because they've officially been at the blockchain hub in Davos, Switzerland for 2 years now. Alongside some of the biggest names in all of crypto, people that represent IBM, and people part of State Street Digital, one of the world's largest custodians alongside BlackRock, Fidelity, and Vanguard. We can see Tokenizer right here, market caps during the peaks last bull run. Doge reached a $98 billion market cap. Shiba Inu, a complete joke, $15 billion. Terra Luna, $33 billion. Litecoin, $27 billion. And on the other end, we have Casper right there. Hasn't even broken a bill. And this is talking about the peak of its market cap. It is yet to experience a bull run. It would have to do almost a 6x to even be equivalent to HBAR. And also, speaking about tokenization, we can see shared by Blockworks, globally, real estate, including commercial and residential, is valued at over $330 trillion. I remember doing YouTube videos several years ago, and the total real estate market was like $230 trillion, so we can see it's grown. This is more than all stocks and securitized debt combined, so this is more than equities. And the global equity market surpassed $100 trillion. All of these things will be tokenized in the future. It is not if, it is just when. And remember, in the beginning of this video, I referenced Hyperledger, IBM, and Casper, tokenizing, transacting, and verifying a bond transaction. And also highlighting the Siemens digital bond of 60 million euros. So tokenization is becoming increasingly popular among investors in this industry. Real estate tokenization is the process of fractionalizing real property into tokens stored on a decentralized database. So now you have the benefits of asset fractionalization. You can own a smaller portion. This lowers the barrier to entry, so you don't need a huge amount of money to have some real estate in your portfolio. And it's decentralized, and a variety of people have a public copy to the truth of transactions, so there's less fraud and way more trust. Real estate tokenization converts the value of real estate into a token, enabling digital ownership and transfer, making it tradable and traceable. These divisible tokens each present a fractional share of an ownership stake in that real estate. Similar to NFTs, they can represent ownership of a part of a real property, an interest in a debt secured by real property, a right to share in the profits generated by a real property. So think of a REIT, a real estate investment trust. So think of a 300-unit condo, and that could be in a real estate investment trust. All of the investors pool their capital together, and those profits are distributed to the REIT holders. So we could tokenize this, also program smart contracts to automate this entire process. Get rid of the 510 infinite amount of middlemen in between a real estate transaction that are taking hefty fees. And of course, we have an equity interest in an entity that controls real property. Advantages of tokenization: lower barrier to entry, of course, allowing smaller investors to participate, lower minimum and smaller investment amounts, better liquidity. Real estate tokens are easily and securely transferable by way of blockchain, so this means 24/7. I don't have to wait until some office is open or make a phone call to get all of this transferred. I could do a digital signature online and have it all verified on blockchain. And thanks to disintermediation, getting rid of middlemen, we can save money and have lower transactional costs. As a result, investment transactions are generally completed faster and at a lower cost to the parties involved. So since more investment transactions are now able to be processed at a faster rate at a lower cost to parties involved, this can facilitate higher returns for investors that have better capital efficiency. They have their money a lot faster and they're ready to do more deals. It's this huge flywheel effect. Tokenization also provides a host of other benefits. This is a really good thread. A real-time cap table tracking, improved accessibility, greater transparency, you know it, allowing investors to access multiple property types, different geographies, lowering the barrier to entry. Portfolios of investors are diversified because they're able to invest in various types of real estate, commercial, residential, funds, and more. So traditionally, when a real estate asset is to be sold to another party, one must go through a heavy process of transferring documentation. This takes a huge amount of time, and there is high plausibility that security can be scrutinized. Token transfer, however, is a very quick and easy process that can be done between two parties anywhere in the world on blockchain 24/7. So there's a variety of different real estate projects that I have my eye on. I know Proppy is one of them. There's also another one that Ripple's investing in, and I'm excited to see which projects actually get real use cases going and where they get traction. So remember, this is just one example of real estate tokenization. Can you imagine the possibilities in traditional finance? Tokenization in the gaming space, intellectual property, anything. This is going to give rise to brand new asset classes. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.